Our group will present Chapter 26, Internal and Governmental Financial Auditing and Operational Auditing.
Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Ain Fatihah binti Nur Azli.
Hi, Assalamualaikum. My name is Nur Nadia binti Muhammad Khalid.
Hai, Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Syahira binti Syahril.
Assalamualaikum. My name is Non Nisa Suri binti Nizal.
Hai, Assalamualaikum warahmatullahi wabarakatuh. My name is Erni binti Muhammad Hasni.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Ain Fatihah binti Nur Azli. Today I would like to explain the first part is internal financial auditing. Internal financial auditing is an independent objective assurance and consulting activity designed to add value and improve an organization operations. Besides that, it helps an organization accomplish its objective by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of risk management, control, and governance process. Internal financial auditing also performing traditional responsibilities such as reviewing the reliability and integrity, ensuring compliance with policies and regulations, and safeguarding asset. Besides that, internal auditor broader than objective external auditor. Internal financial auditing are focused on exclusive documenting and testing control for 7 Oxley Act Section 404. Internal financial auditing also may serve as a consultant, focusing on recommendations that improve organizations' performance. And lastly, internal financial auditings are not relied by external users. Next, the second part is Institutes of Internal Audit Malaysia or IIAM. Institute of Internal Audit Malaysia is a professional guidance of internal audit in Malaysia. Institute of Internal Audit Malaysia or IIAM is non-profit professional organizations. It also dedicates to the advancement and development of internal audit in Malaysia. Institute of Internal Audit Malaysia or IIAM is established in year 1977, but in year 1994, Institute of Internal Audit Malaysia IIAM is incorporated as a company limited by guarantee. The first part is Institute of Internal Auditor Ethical Principle and Code of Ethics. All IIA members and certified internal auditor must follow and require all the compliance with this standard. First is integrity. As an internal auditor, integrity is a trust and thus provides the basis for reliance on their judgments. Secondly is objectivity. As an internal auditor, this is the highest levels of professional objectivity, which is in gathering, evaluating, and communicating information about the activity or process being examined. Third is confidentially. For confidentially, is internal auditor must respect all the value and ownership or the information that they have received. Internal auditor must do not disclose information without appropriate authority unless first there is a legal reason and secondly or professional obligation to do so. Lastly is competency. For competency, as an internal auditor, first they must to apply all their knowledge, skill, and experience needed in the performance of internal auditing services. The second part is Institute of Internal Auditor Professional Practice Standards. First is attribute standards. In this part have 5 sections, which is first is 1000 is a purpose, authority, and responsibility, which is internal audit activity must formally define in the internal audit character, consistent with the definition of internal auditing, the code of ethics, and the standards. Secondly is 1100, which is the independent and objectivity, is all the internal audit activity must be independent and the internal auditor must be effective in performing their work. Third is 1130, impairment to independence or objectivity. It is its impact, in fact, or appearance. The detail of the impairments must be disclosed to appropriate parties. Our last but not least, 1200 is proficiency and due professional care. This is which is engagement must be performed with proficiency and due to professional care. And lastly, 1300 is quality assurance and improvement program. As a chief audit executive must develop and maintain a quality assurance and improve all the programs that have been covered, all aspects and internal audit activities. Second part is perform standards. In this part have a 7 section, which is first is 2000, managing the internal audit activities. As the chief audit executive, they must effectively manage the internal audit activity to ensure it adds value to the organizations. Secondly is 2100, nature of work. The internal audit activity must evaluate and contributions to the improvement of governance, risk management, and control process. Next is 2200 is engagement planning, which is internal auditor must develop and document a plan for engagement. This is including the engagement objective, scope, timing, and resource allocations. After their plannings, they must performing the engagement, which is 2200. Internal auditor must identify, analyze, and evaluate all the documents, sufficient information to achieve the engagement objective. After they are performing in 2400, communicating the result. After the performing the engagement, the internal auditor must communicate the result of engagements. Next, in the process is monitoring progress. As a chief audit executive, they must establish and maintain a system monitor to disposition of result communicated to management. And lastly, 2600 is communications, the acceptance of risk. This is responsible also to the chief audit executive, which is they must conclude the management has accepted a level of risk that may be unacceptable to the organization. So as the chief audit executive, they must discuss the matter with the senior management. Next, I will explain about the relationship between internal and external auditor. First, I will explain about their similarities between internal auditor and external auditor. The first similarity is competency. For competency, internal auditor and external auditor, they must apply knowledge, skills, and experience in their auditing. The second part, internal auditor and external auditor, is objectivity, which is internal and external auditor must remain the objective in performing their works and reporting their result. The third part, similarity between internal auditor and external auditor, is methodology. For internal auditor and external auditor, they use the same methods in performing their audits. Next is their planning, and third is performing tests of controls and substantive tests. And lastly, the similarities between internal auditors and external auditors is audit risk model and materiality, which is they have to decide and extent of their tests and evaluating result, but decision about materiality and risk may be different. So, what is their difference between external auditor and internal auditor and external auditor? First, the difference is internal auditor is responsible to management and board, while external auditor must responsible to financial statement user who rely on the auditor to add the credibility to the statements. Next, I will explain more about the relationship between internal and external auditor. First, external auditor rely on the internal auditor, which is they using the audit risk model to assess the control risk. So if this method is effective, the external auditor can reduce the control risk, and also besides that they can reduce testing. So the result also will reduce external auditor fees. Besides that, other relationship between external auditor consider internal control effective if they first are independent of the operating unit being evaluated, second competent and well trained, third apply a systematic and disciplined approach including quality control. So in this part, the conclusion is external auditor are allowed to use internal auditor, which is external auditor most is a complete external auditor is complete audit, while an internal auditor is a staff perform auditing and testings. So the ending result first is less time and a lower fee. The last part that I will explain is a guidelines to director on statement of internal control. The Malaysian Code on Corporate Governance first was issued in 2000, was amended in October 2007, which is the code to reflect first the significant changes in the corporate government landscape, and secondly to the further strengthen the corporate governance practices in line with developments in the domestic and international capital market. Besides that is to provide guidance to director of public listed company in making disclosure in their company annual report. The intention is that companies should have discretion to explain their governance policy in light of the principles, including any special circumstances which have led them to adopting a particular approach. Next, we derive from the Timber report. Third, explain the key area that the director must pay attention before they can make a statement in regard to their company internal control. Fourth is emphasize the need for proper risk management, which is the guidance is based on the adoption by the company board of a risk-based approach to establishing a sound system of internal control and the process for reviewing its effectiveness. Next is to evaluate the adequacy and the integrity of their company system of internal control, which is for the purpose this guidance internal control considered by the board should include all the type of control, including those and operationals and compliance nature, as well as the internal financial control. And lastly, in the guidelines to director on statement of internal control is the director are also expected to independently consider other areas that are specific to the business that they are engaged in. Next, I will pass to the next presenter.
Okay, I will explain my part, which is governmental financial auditing. Okay, in the first slide, federal and state government employ their own auditing staff in Jabatan Audit Negara in ways of internal auditor and external auditor. So, the primary source of authoritative literature of performance in government audit, which means audit manual, was issued by Jabatan Audit Negara. Okay, for example, they consist of financial statement, governmental units, government contract and grants, internal control, fraud, and the last one, other non-compliance with law and regulation. We move to second slide, which is financial auditing standard. Okay, the first point, materiality and significance. Meaning materiality and significance is the yellow book recognized in government audit. The threshold of acceptable audit risk and materiality may be lower than in an audit of a commercial enterprise. So I want to clarify about yellow book, where the yellow book come from. So it released by government Accountability Office (GAO) to the new version of Government Auditing Standard, which is Yellow Book. So why it's yellow? Because of the cover, because of its cover. So it refers as a Yellow Book rather than by its formal name. So back to the topic, back to the point. This is because sensitivity of government activity and their public accountability. Okay, second point, quality control. CPA firms and other organizations that audit government entities in compliance with Yellow Book must have appropriate system with internal quality control and participate in an external quality review program. All these things requirement exist for some CPA, but only as requirement membership of AICPA and audit public companies. So here come with the third point, compliance auditing. So the audit should be designed to provide reasonable assurance of detecting material misstatements resulting from non-compliance with provision of contract and grant agreement. So if we want to provide a reasonable assurance, the audit must have a material and a direct effect of financial statement. Okay, for the last point, report or reporting. So the audit report must state that the audit was made in according with GAGAS. GAGAS means generally accepted government auditing standard, GAGAS. Furthermore, financial statement must be described in law and regulations and present the result at those tests, or separate or refer to the separate report in that include in information. For this slide about reporting requirement of Single Audit Act 1984. So before I proceed with further explanation, I would like to give a definition of Single Audit Act 1984. So it means provide single coordinated audit to meet audit requirement for all federal agencies. Okay, the first point, the audit should be in accordance with GAGAS. Okay, next, the auditor determine whether complied with law, regulations, and the provision of contract, or complied with grant agreement that may have a direct or material effect each of its major program. And the last point, the auditor obtain an understanding of internal control over federal program sufficient, which means to support a low level of control risk for major program. A133 compliance supplement, it lists specific requirement for individual federal program and compliance requirements along with suggested audit procedure that should be in every audit. So the following are examples of specific compliance objective. Okay, the first one, whether the amount report as expenditure were for allowable services, whether the record show that those who receive service or benefits were eligible to receive them, and whether matching requirements, level of effort, and earmarking limitation were met. Okay, matching requirement means that government unit matches with federal funds. The single audit apply only the audit of state and local government, but it was extended in 1990 to the higher education institution and organization by Office of Management and Budget (OMB) through issuance of OMB Circular A133. So here the list of reporting requirement under OMB Circular A133. So it must have a schedule of finding and quotient costs. So a report on internal control related to the financial statement and major program, and an opinion whether the financial statement are in accordance with GAAP, and an opinion also whether the schedule of federal awards is presented fairly. So presented fairly is on all material respect in relation to the financial statement as a whole. And the last, the report on complying with law, regulations, and the provision of contract. Or it might also can grant agreement where non-compliance could have a material effect on financial statement. So this report can be combined with the report internal control. Okay, that's all from me. I will pass to the next presenter. Thank you.
Next, I will be explain about the operational auditing. Okay, for the operational auditing, basically they deal with the efficiency and effectiveness of an organization. Next, the purpose of the operational auditing is to determine the effectiveness or efficiency of any part of an organization. I give example. Testing the effectiveness of internal control by the internal auditor. This activity considered as the operational auditing because this activity can help organization operate its business more effectively or efficiently. So that is the operational auditing objective. Next, the operational auditing also can determine whether the company is effectively and efficiently producing product. For example, a company has adequate trained assembly line personnel. So this is part of operational auditing also, because they make sure the assembly line personnel is efficient and effectively. Next, I will be explain difference between operational and financial auditing. Okay, these different have the three major types, which is first, personal purpose of the auditing. Okay, financial auditing impairs whether historical information was correctly recorded. So basically, financial auditing will use the previous document to check information are correctly or incorrectly. If any misstatement will be refer the previous document, and then the operational auditing impairs effectiveness and efficiency. Okay, mostly operational auditing, they focus on the improving future performance. For example, they will evaluate whether a type of new material is being purchased at the lower cost to save money on the future raw material purchase. So that is the purpose for the financial auditing and operational auditing. Second is distribution of the report. Distribution of report. Okay, financial auditing report are typically distributed to external user of financial statement. Okay, the external user such as a stockholder and banker. Okay, they use the financial report to get investment or to make a loan. They will be use the financial auditing report, and then for the operational auditing report are intended primarily for the management, for the management. Okay, operational auditing report basically they use to uh, to to make decision or to improve the operational more efficient or more effectiveness. That is operational auditing report. And then number 3 is inclusion of the non-financial area. Okay, financial auditing are limited to matter that directly affect the fairness of financial statement presentation. And operational auditing cover any aspect of efficiency and effectiveness of organization. For example, operational auditing may address the effectiveness of an advertising program or efficiency of factory employee. That is function for operational auditing. Okay, next, effectiveness versus efficiency. Effectiveness and efficiency is very important in the operational auditing. Okay, for the effectiveness, that is referred to the accomplish of objective, such as produce part without defects. For example, they want to produce the product with the high quality, so they will make sure the product they produce must not have any problem of defect on the product. So when they get this objective, that is called effectiveness. And then efficiency is defined as the reduced cost without reducing effectiveness, which is when they want to produce the product high quality, they need to make sure they use with the minimum cost, and with the minimum cost they also can achieve the objective, and that is the efficiency. Next is type of inefficiency. Okay, I will be explain some of the inefficiency in the operational. So first, acquisition of goods and service is too costly. For example, for purchase of material are not requirement. So which mean the cost of the raw material is so high cost. So that is the inefficiency. Next, raw material are not available when needed, which is example, an assembly line was shut down for lack of material, which for example when they want to provide some product but the raw material is not available, so the assembly line should be shut down. So that is the inefficiency. Number 3 is the duplicate of effort by employee exits. For example, production and accounting keep identical records, and then work is done that serve no purpose. Example, vendor invoice and receiving report are filled without being used. And the last, there are too many employees. Office work could be done with one less assistant. When the operational have too many employees, so there is be problem in the operational. So that is the efficiency.
Relationship between operational auditing and internal control. Effective internal control are designed and implemented to help organization achieve this objective. The first one is reliability of financial reporting. Second one is efficiency and effectiveness of operations. And the third one is compliance with applicable laws and regulation, as the management need reliable cost accounting informations. For example, to decide which product to continue producing. There are two things to distinguish: internal control evaluation and testing for financial and operational auditing. The first one is purpose and the second one is the scope. The purpose for operational auditing of internal control is to evaluate efficiency and effectiveness and to make recommendation to the management. And for internal control evaluation of financial auditing, to determine the extent of substantive audit testing required, and also to report the effectiveness of internal control over financial reporting. And the second one is scope. Operational auditing concerns any control affecting efficiency or effectiveness. And for internal control evaluation for financial audits, restricted to the effectiveness of control over financial reporting, and also the effect in the fair presentation of the financial statement. Next, types of operational audit. There are 3 types of operational audit. The first one is functional audit, the second one is organizational audit, and the third one is special assignment. For the first one is functional audit. Functional audit is to deal with one or more function in an organization. For the example, the efficiency and effectiveness of the payroll functions for a division or for the company as a whole. The advantage of the functional audit, implementing specializations by auditors, which is certain auditor within internal audit staff can develop considerable expertise in area. For example, production engineer, they can be more efficient and effective in auditing in that specific area. And then disadvantage, the failure to evaluate interrelated function, as for example for the production engineer interact with many and other function in organizations. Second one is organizational audit. Operational audit deal with an entire organizational audit, and an organizational audit emphasize how efficiently and effectively function interact, and the plan of organization and the methods to coordinate activities are important in this type of audits. The last one is special assignment. Arise at the request for a wide variety of audit, such as determining the cost of an effective IT system, investigating the possibility of fraud in the divisions, and making recommendation for reducing the cost of manufactured product. Who perform operational audit? Operational audit usually performed by one of these 3. The first one is internal auditors, second one is government auditors, and the third one is CPA firms. The first one is internal auditors. Internal audit department do both operational and functional auditing, and internal auditor have an advantage in doing operational audits. It is because they can develop considerable knowledge about the company and also the business itself, and it is essential to have an effective operational auditing. Internal audit department report to the board of director or president. It is because to maximize the effectiveness for both financial and operational auditing. Internal audit have access to an ongoing communication with audit committee of the board of director. Second one is government audit. It's different federal and state government auditors, and the most widely recognized government auditors is the Government Accountability Office. Performance audit include the economy and efficiency audit and also program audit. The third one, CPA firms. The audit consists of identifying operational problems and also making recommendations. The background knowledge about client business, and external auditors must obtain the knowledge while doing an audit. For example, the auditors must determine the cause of the slower turnover. It is because to evaluate the possibility of the obsolete inventory misstated in the financial statement. Next, engage a CPA firm to do auditing for one or more specific part of its business, and engage with CPA firm only when the company does not have an internal audit staff, or if the internal audit staff lack expertise in a certain area. Independence and incompetence of the operational auditors. The 2 most important qualities for an operational auditor are independence and competence. The auditor should report to the appropriate level of management to ensure that investigation and recommendation are made without bias. The independence of internal auditor will enhance by having the internal audit department report to the board of director or president. And the responsibility of operational auditor affect their independence, as the auditor not be responsible for correcting deficiency when ineffective or efficiency operations are found. But it is acceptable for auditors to recommend change in organizations, but the organizations can either accept or reject the recommendations made by the auditors. The auditors have the authority to require implementation for their recommendations. Their independence will be reduced. Competence. Competence is to determine the cause of the operational problems and also to make appropriate recommendations, as the operational auditing deals with a wide-ranging operation problems. For example, difficulties of finding qualified internal auditors who can evaluate both the effectiveness of advertising program and the efficiency of the production assembly process. The internal audit staff that doing such type of operational audit will be assumed that the auditors have both background in marketing and also productions.
Okay, for the evaluating efficiency and effectiveness, they have two criteria, which is specific criteria and the sources of criteria. So, for the specific criteria, are usually described before starting operational auditing. So, before the auditor do the operational audit, they will be asked some question on the operational. So that will be start to evaluate efficiency and effectiveness in the operational. Next, the sources of criteria to develop specific criteria. Usually, the operational auditor can use several resources. They will be use some resources to evaluate efficiency and effectiveness. So, the several resources will be explained from my friends what the sources the operational auditor use.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Ernie binti Muhammad Hasni. So I will present about plan and perform an operational audit. So I will explain about the source of criteria. So there is four sources of criteria. First is historical performance. So historical performance is based on actual result from prior periods. So auditor can determine whether things has become better or worse. So the advantages of this approach is to make sure that the criteria are easy to derive. However, they may not provide much insight into how well or poor the results are compared to what they could be. So the second source of criteria is benchmarking. So basically, benchmarking is entities within or outside the client organization may be sufficiently similar to the client's organization to use their result as criteria. So auditor should use care in selecting organization to use as benchmark. So it make a little sense to benchmark with dissimilar organization or those that perform at a substandard level. So for the third source is engineered standard. So auditor can use time and motion studies to determine efficient production output rates. So these criteria are often time consuming and costly to develop because they require considerable expertise, but in some cases it may be worth the cost. So standard can be developed by industry group for use by all their members, thereby spreading the cost. So for the last source of criteria is discussion and agreement. So these parties involved should include management of the entities to be audited. So the operational auditor and the entity or person to whom the finding will be reported. So sometimes other criteria may be cost to obtain. So this discussion and agreement are best to develop. That's all. So there are three phases in operational auditing. First is planning, second is evidence accumulating and evaluating, and third is reporting and follow up. So First, planning. So we determine the scope of the engagement and communicate it to the organization audit. So the major difference between planning and operational audit and a financial audit is the diversity created by the breadth of operational audit, which often make it difficult to decide on specific objective. So example is scope of engagement, staffing, background information, understand internal control, and decide on appropriate evidence. So for the second phase is evidence. So operational audit must accumulate sufficient evidence about elevator safety inspection. This is for example is documentation, client inquiry, analytical procedure, and observation. But for confirmation, performance, and recalculation are used less intensively for most operational audit than for financial audit because the existence and accuracy objectives are not relevant for the most of operational audit. So for reporting and follow up, so when reporting are being prepared, follow up to determine whether the recommend changes were made, and if not, why not. So first, in operational audit, the report is usually sent only to management. So the lack of third-party users reduce the needs for standardized working in operational auditing report. So for the second, the diversity of operational audit require tailoring of each report is required in operational audit. Why? To address the scope of the audit, finding as recommendation. So this is three example of operational audit finding, which is one is outside janitor firm save $160,000. So internal auditor review the efficiency and effectiveness of the janitor service furnished by state employees for the building in the state capital complex. So they disclosed the cost of the janitor service were expensive when compared with similar service performed by outside janitor firm. So the auditor found that many janitorial tasks were not complete as required, so resulting in unacceptable quality. So a study of alternative janitor service indicate equal or better service could be provided by an outside janitor firm. So an saving of 137,000 per year compared to 160,000. So the auditor recommended the state seek competitive bid and contract with the janitorial firm submit the lowest bid that meet the specification. So the resultant contract actually save more than 160,000 and the quality of the cleaning improved noticeably. So for the second example is use the right tool, which is a company lists 25 heavy duty truck for use by service employees who install and repair about 20,000 vending machine in a large metropolitan area. So all of the truck were equipped with hydraulic lift gates for loading and unloading vending machine. So the internal auditor found that only a few of the truck were actually delivering and picking up vending machine. So for the third example, which is computer program save manual labor. So the Federal Employee Retirement Income System, which is ERISA, requires an annual audit of profit sharing plans. So internal auditor test the profit sharing plan as required by ERISA, but also perform an operational review, so which provided a number of valuable recommendations to management. So that's all from us. So that's all from us. That from topic Internet and Governmental Financial Auditing and Operational Auditing. So thank you.